Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free video report for Wednesday, July 19th, 2017. So, real quick, that little tester was sending the email to me, and I will send you the coupon code. That was a back end nightmare. I'm still trying to get back to people on it. So, you're just going to get the coupon code here. If it runs out, it runs out. You can send me an email, see if I can put more on there. But the whole email thing up front was not a smart idea. So anyway, let's get started. We had a pretty strong day today with the S&P, and what I'm going to show you, this was not unexpected. It's not a surprise. And as much as we go over where we're expecting a July top and some really nasty market action to come, we also do shorter term time periods. So we have the overall view, let's say our larger big picture, but our big picture is just going for the next move. It's not looking a year out, 2 years out, 5 years out, calling a new bull market, a new bear market. We don't care about that. There's too many points to be made up and down to worry about. Who's going to be right 5 years from now? I mean, who cares? But the thing is that when we get these golden halo patterns that are in place. I showed you last night, and I'll go over a few of them again tonight. Is they may look like they're wrong, and trust me, we've been doing this since 2013, and I know in 2014 I was getting the same emails with people saying Woody's wrong, it's not going to happen, and before we knew it, the S&P was 150 points down. Come 2015, same emails. It's wrong. It's wrong. Why are you guys shorting? It's down, another 200 points. So it's what you have to be patient with this. These dates are here and they're not moving. But when you get a move that we had in June that looked like a top, all right, you call it a top until it's proven different, wrong. And the thing is, we had a series of lower highs and lower lows. So we were in a downtrend. Yes, Yellen came out with something, and the S&P gapped up some 15 points and blew through all that. So what? You have your stop in place, and that's it. But it doesn't reset the time period that has been in place, and that's what I'm trying to kind of get out to people is yes, we have the bigger picture, we have this, but we also have the shorter time periods where, in the morning notes, I let people know where we are as far as in a pattern structure. Woody sends out updates during the week when there's a high sentiment reading, and this is the important thing because you have to know when, which is the time period that we've been telling our subscribers for the last month and a half, which doesn't mean that we've been calling a top for the last month and a half. It's always been in this time period. Why is going to be the extreme bullish sentiment that's out there? Because if you have to take a step back and think about this, is the market going to have a big move to the downside if everybody is bearish? No, that's when the market makes the lows, and it's human nature. It's the psychology of the markets. When the market is dropping, everybody gets bearish. When the market is rising, everybody gets bullish. But what happens is when it's making a bullish pattern or a golden halo, they take time to play out, and what that's why tops are rounded. It's not it just drops off a cliff. They're always going to be dip buyers, and eventually it's going to lose and it goes down. But when you're making a bottom and you get extreme bearish sentiment readings, that's the important part about knowing when. And when you get those extreme bearish readings, those are great buying opportunities, and we've seen how fast this market moves in both directions. Right now it just seems like it's grinding higher, and yeah, we had a great day today, but like I said, this is all part of the pattern that we've been laying out to subscribers on the short-term basis. So like I said, the golden halo part, it's still here. We're in the twilight zone right now, and there is going to be an important decline that's going to be pending. So this is the market. This is something that we put out today, and what he had said is that yesterday the sentiment registered an 89% bullish reading. Now, think about what happened yesterday. The S&P was down for most of the day and then ended the day up a point and a half, but yet still almost 90% of the participants were bullish. It means that everybody's just buying everything right now because there's why? Because they're in the euphoric time period where they believe that this market's never going to go down. So any little dip, they're buying and they're bullish on the market, and that's what I mean. Everybody has to be on that side for important drops to take place. So what he had put was that if we have a strong close today, it's most likely going to generate a 90% bullish or sentiment reading. We will have that tomorrow morning, and it's most likely going to be above 90%. And we've always been saying that there's a July high, and then it's going to look negative, and I have to put these dates out. But don't be complacent. Now, these are the morning notes that I put out yesterday, and I was just summing up the wave structure because remember what we do. We have our time, sentiment, and then technicals. The technicals is where, and this is on a short-term basis. So what was it? It was down and then up to complete wave 5. What happened? We went down. This is just a 5-minute chart. So this was yesterday. We went down and we were up. This completed this. Now we're looking for down, and we have a golden halo pattern. Not golden halo. A gap omen pattern, which I'm going to go over tonight right now, and show you why it actually makes sense that this is actually playing out exactly as planned. So what was the support area on this? Now this is going back on the 18th. The support area was 2450. So the S&P was at 2462, went right down to 2450, and now we're back up. So is anybody surprised that today was up? No, it's not. This is all part of the pattern that we're looking for. So that's what I'm saying. We have the overall picture, the bigger picture, where important declines are coming, but yet you still have the shorter term information that is going to help you make trades if that's what you're looking for. So again, right now we're in this euphoria area. Everybody is bullish on the market. Nobody sees a reason for it to go down. This is not when you want to be buying. You want to be buying when everybody is panicking, and this is what the institutions do. They're shorting up here, and what happens is once it starts coming down, they start covering their shorts. Once it gets into the capitulation, they're buying. So they're long and short in the meat of this entire thing. This is what your retail does. They're buying up here and they're selling down here. So that's why it's important to know where sentiment is at all times, because you're going to get these drops, and when everybody's selling, you're going to get these rallies. And these were predicted. These aren't just charts I'm showing you. These are from reports that we've done, and that's what is really what we see playing out. And like I said before, we have this is from 2014 when everybody was saying that this market's not going down. Woody's wrong, and that's exactly what happened. Look at everybody that was bullish up here. Let's go to 2015. Look at all of these bullish sentiment readings up here. What happened? We went down. Nobody thought this market was going to go down. And then here's today. Look at all this. So the thing is that we're not wrong. We're in a pattern, and this is it. We don't force tops. We don't force bottoms. We let the market tell us. But when you get a drop and it looks like this was the top, we call it a top until it's not. Well, guess what? It's not a top, but it doesn't change the overall perspective as far as the time period and what is coming. So that's why it's important to know this information. So let me pause you for 1 second. I want to go to the gap. Alrighty, so like I said, right now what we were anticipating was that the market to go down, up, and then down again. So right now we're looking for the markets to go down next, and we are in a gap omen. And I put this out. Some of the people that have been around for a while, you know exactly what it is. It's 100%. This pattern so far is 100% failure, and what that means is every time this market, the S&P, has gapped up to new highs, it's come down and closed this gap within days. So anybody that bought this gap got trapped, and they most likely closed their trades. But here's one, here's two. They gapped up. You can't really see it, but it gapped to new highs, came down and closed it. Gap to new highs, came down and closed it. Gap to new highs, came down and closed it. Gap to new highs, came down and closed it. And when I put this out, this was in May. If you look here, May 25th. And if I just go to a May 25th time period, that was this right here. And notice it came down and closed. So the pattern remained 100%. Here's the next one. This is going back into June. The market gapped up into new highs. Guess what? It came back down and closed it. Why is it important? Well, guess what? We gapped to new highs today. So the gap omen is in play right now. And if you remember, what am I looking for? A wave 4 down followed by another wave 5 up. So things are in play right now. And that's where I'm saying you need to be really, really careful. Right now, for the short term, if they head up, me personally, I may take a short trade just for this gap to get closed because the pattern is 100%. And why should I doubt it's not going to work this time? I will definitely have stops in place. But the thing is, this gap right now, if we're going back the last 2 years, it's 100% that it's gone down. And I'm looking for a specific pattern to watch this top that takes place all the time. But the main thing right now is that we are trading within this reverse symmetrical triangle. And once we get up here, I'm anticipating that we're going to come down, close the gap, and then come back up again. But again, this is another bearish pattern. This is not a bullish pattern that you want to be buying into. So right now, like I said, we're going to be entering some really, really, really interesting times. Nobody thought that this market was going to go down in 2014. It dropped 100 points. Nobody thought that this market was going to go down in 2015. It dropped 100 points and then dropped 200 points. So don't listen to what everybody's telling you. Be cautious right now. If you want to get, have the best market timer in the world, holding your hand through these very, very volatile times that are going to be coming. Take advantage of this coupon on it. Again, it is the money back guarantee. If the market does not do what we're expecting by September, then ask for your money back. But I have a feeling that nobody's really going to be asking for their money back. So with that, until next week, have a great night, and I'll talk to you guys next week.